Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Okay, in today's video, in this particular video, we are going to be diving into a powerful Forex trading strategy that combines two essential indicators, which are the ADX or the average directional indicator, average directional movement index, and the MACD, which is also called the moving average convergence divergence. So whether you are new to trading or looking to refine your strategy, understanding how these two indicators work together can be a game changer for spotting trends and finding solid entry points. Now, in as much as these two indicators can be effective and can help you to enhance your trading strategy, they do not guarantee profit. All right, so it's important for you to note that. So whether you are new to trading or looking to refine your trading strategy, this video is going to be of use to you. All right, let us start with a quick review. The ADX and the MACD are two indicators that provide different but complementary information. So I'm just going to be adding both the ADX and the MACD to the chart. This is the ADX as we can see, and then I'm also going to be adding the MACD to the chart. All right, so here we go. We have the ADX and we have the MACD both added to the chart. Now the ADX tells us the strength of a trend, helping us distinguish between strong trending markets and range bound markets. MACD, on the other hand, focuses on momentum and potential reversals. Okay, so when we use both together, we get a more complete picture of the market, all right, where it's headed and whether that move is gaining strength. Now, the ADX, let me just set the ADX to its default settings. All right, just gonna set it to the default settings. Okay. Okay. So this is the default settings for the ADX. All right. But then when using this indicator, you can manually input the levels where you want to use to monitor the strength of the trend. And I'm going to recommend imputing the 25 level, all right, and the 30 level. Okay, you can see they have appeared here. So now, when the ADX line is above 25, it signals that there is a strong trend. On the other hand, below 25 shows that the trend is likely weak or the market is ranging. Then when you have the ADX cross above 30, it adds even a stronger momentum to that signal, all right? Meanwhile, the MACD combines two moving averages to show momentum with crossovers indicating potential changes in direction. Now, why are we combining these two? ADX by itself shows the strength of the trend but does not tell us the direction. That's where the MACD comes in. By combining ADX's trend strength insights with MACD's directional and momentum signals, we get a clearer idea of the market's direction and potential entry and exit points. Okay, so let us take an example now. All right, so we can see that in this situation we had, let us see, we had okay, let us look for another example. Okay, we can see here we had the ADX rise above the 25 level and even above the 30 level, and just before that happened we already had the MACD give us a buy signal, right? So this shows that in addition to the buy signal, the rising ADX value showed that the trend strength was quite high, and you can see that we had a rally all the way up to this point. So we would have considered entering a buy right after we noticed the ADX crossed above the 30 level. This was where the MACD gave us a buy signal, but we would have just waited until this point before we entered. So we would have caught somewhere around, wow, this is a big catch, right? About 1300 pips. Okay, we would have caught about 1300 pips, all right? Now let us look for another example. Okay, let us see if we can find an example whereby, okay, we can see now in this situation, in this situation, uh, we had the ADX crossed above the 25 and even the 30, but we did not have a confirmation from the MACD to buy. All right, we didn't have any confirmation to buy, so we should have just stayed away from this signal, okay, because there was a conflict, right? There was a conflict. So make sure that you always have a confirmation. Make sure that the ADX and the MACD are saying the same thing before you enter a trade, okay? It is very, very important. Remember that the MACD line crossing below the zero line signals a sell signal, gives a sell signal or signals a bearish move, while the MACD line crossing above the zero line signals a bullish move. Okay. Now, once both of your indicators are set up, obviously you need to open your platform, whether you are using the MetaTrader platform or you're using TradingView or any other platform. You need to open the platform, go to the indicator section and load both the ADX and MACD to your chart. All right. Now, once you've set up both indicators, it's important that you keep an eye on how they react. Remember, ADX alone doesn't show direction. It's very important that you remember that, okay, so that you will not assume that when the ADX line is going up, that it is telling you that it's a buy signal, and when it's going down, it's telling you to sell signal. No. What it shows you is the strength of the trend, all right? This one particularly is the ADX line, and that is what we are focusing on in this strategy, okay? These other two, vocal lines are part of the ADX indicator, but our focus is on this ADX line itself. All right, and that is for the ADX, right? And for the MACD, note that the MACD can tell you the momentum and the direction of the trend, okay? Because we have increasing histogram bars showing you an increase in strength, while short histogram bars can show you that the strength is quite weak. Okay, wherever on the other hand, when you have the MACD line cross above the zero line, it's a buy signal, and when you have the MACD line cross below the zero line, it is a sell signal. Okay, so it's very important that you understand these things. Now, while the ADX and MACD combination is powerful, it is essential to keep some best practices in mind. All right, first, use this strategy on higher time frames like the 4 hour or the 1 hour chart or the daily chart. As you can see, I'm currently on the 4 hour chart. We are doing this analysis on the 4 hour chart. Okay, this helps filter out market noise and gives more effective signals. Okay, so in shorter time frames, signals can be less accurate due to price volatility. Also, don't rely solely on ADX and MACD. Okay, you can use them alongside other tools like support and resistance levels or candlestick patterns for more confirmation. I usually emphasize on the importance of support and resistance zones on your chart. It's very important, irrespective of the strategy that you are using. These zones can give you potential reversal points ahead of time. Irrespective of the strategy you are using, these levels are very important. All right, you all just have to watch out for a minimum of 2 points of rejection, okay, along a line, right? When you have 2 points, when you have a particular line or a particular horizontal zone where you have rejection of price at least 2 times, you have a zone there, whether it's support or resistance. All right, so just mark those zones on your chart on the higher time frames. They are going to come in very useful and handy. Okay, so to sum up, the ADX and MACD are fantastic indicators on their own. Okay, but when combined, they give us a clearer, more confident view of the market's direction and strength. Give this strategy a try on your demo account and see how it enhances your trading decisions. If you found this video helpful, please hit the like button to let us know and subscribe to stay updated on all things trading. Don't forget to turn on the notifications so you never miss a new video. Thanks for watching and happy trading.